So how to avoid losing your retirement accounts in your divorce. So you're getting divorced, there's retirement, you're trying to figure out, is there a way to protect these assets? Is my wife or your spouse, whoever you are in this thing, going to get half of this retirement? Are they going to get part of this retirement? So they certainly may. I mean, any property is definitely divisible. It's definitely an issue in a divorce case. But retirement accounts, first of all, you want to look at how long have you been married. Because if you've been married a short time and you have some retirement accounts in place, you probably had money in these retirement accounts before you got married. Because Michigan is, first of all, so one strategy in protecting retirement accounts is looking at premarital assets. Michigan's a dual property state. We're not a community property state. So that means that you don't just split everything half and half no matter what without any discussion or looking at it or any analysis. Basically, there are exceptions to the idea that you have to split the retirement accounts 50-50. So one exception to that is premarital property. So if you've only been married 5 years and you've had a 401k account going for 20 years, you had a lot of that money there before you got married, and you can protect that in your divorce case. And it would be valid to say, well, that first 15 years of money that I put in the 401k is mine. So if I had $100,000 in there at the time I got married, and now it's 120, then I could say, well, I get to keep the 100, and then the 20 is split half and half. So you'd end up with 110, and your wife would get 10 out of an account with 120 in it. So one strategy is looking at premarital property, and there'd also be some gains on the money that you had prior to the marriage. But for simple math, you just say, well, I had 100, I get the 100, and we split the rest. So that's one strategy, is look at premarital portions of these accounts, whether they're 401ks, IRAs, pensions, whatever they are. You do that. Another strategy to avoid losing these retirement accounts in your divorce, or a way to avoid losing costs and losing money, is if it's going to happen, if you're getting divorced and you're going to have to split some retirement accounts with your spouse, you're not going to want to cash that out. You're not going to want to borrow money. That's a common mistake that people make, is they think, well, my wife's going to get half of this 401k, so I should take out a loan. I got 30 grand in there, I should borrow 15, get her 15. That's not what you want to do. You can avoid, if we know that you got 30,000 in a 401k and your wife's going to get half, she's going to get 15,000 from this account, and we know that, we can do that without having to take out a loan or having to cash out money. Cash out money, of course, is the worst way to go. Then you're paying penalties and taxes. The loan, still not a good way to go. So what you do is basically, to divide the account, you do a QDRO, Qualified Domestic Relations Order, QDRO is the abbreviation form. And so in other words, through a divorce case, there's an exception to this idea that you can't get the money, can't get your hands on the money because it's pre-tax dollars and it's for retirement, and there's all these ERISA rules, federal regulations about accessing the money. Through a divorce case, we can access the money, so we can take half the 401k, move it to your wife's name in an IRA. Now you're still going to lose half your account, but it avoids penalties and taxes and whatever kind of nonsense. It's not a taxable event, to use the words that the IRS would use. So you can take half of the 30,000 in the 401k, move it to your wife's name in an IRA during the divorce. Now she's got 15, you've got 15. There's no taxes, there's no penalties, there's no anything. She's got 15,000 in an IRA, you've got 15 in your 401k, and you go forward. Your wife then does not get part of what your future retirement savings is. She's not going to get any of that after the divorce if you keep contributing. And another strategy to look at with retirement accounts and losing money on retirement accounts during a divorce is to consider whether you should keep contributing to a 401k during a divorce. A divorce case can definitely go on for a while in Michigan, especially if you have minor children. If you got kids under 18, there's a 6-month waiting period, and these things can take that long or longer. Now there's exceptions, they can be a little shorter, but a divorce with minor children is going to be a 5 to 9, 10 month process. So during that 5 to 10 months, you want to be looking at what you're doing with paying bills, what you're doing with savings, and it may not make sense to keep contributing to your 401k when half of that money is just going to go to your wife. Now, you could say, well, maybe the money's just going to go to her some other way. Maybe, but if you're not putting money in there anymore, we at least know that is not getting split with your wife. Maybe you can use it for other expenses. Maybe there's some legitimate ways to use the money that you would have been contributing to a 401k for the next 10 months. And it keeps some of that in your pocket instead of automatically being split with your spouse who's leaving you now that you're getting divorced. So that's another strategy to look at there. You know, and I'm kind of assuming on all of this that there's no prenuptial agreement. If there's a prenup and you're trying to protect pensions, retirement accounts that you had before the marriage, you can do that. If you have a valid prenuptial agreement, that's going to protect that account. Your wife's not going to get any of that. But you know, I think there's certainly strategies here. If you're looking to keep your pension, you want to do a buyout. You don't want your wife getting half of your pension, but you've been married for a long time. You know, been married 20 years, however long. So she's got half of your pension coming. If there's other assets, you could do a buyout. You know, you can get a present value analysis, get a sense of what the cash out value, what the present value is of your pension, and you could say, well, I'd rather just give her some extra money out of this other retirement account, or have her keep the house, I'll keep my pension. You can do those sort of trade-offs. The court will let you do anything you want with property division when it comes to divorces. They do not second guess your decisions. They're not going to get in the way of whatever agreement you have. So you're free to make whatever agreement you want when you're dividing retirement accounts. So that's another strategy on losing retirement, is to, you know, try to protect what it is that you're trying to protect. Now your wife's going to still end up getting half of the assets, more or less, depending on how long you've been married. But you could look at doing that, and you want to make sure you've got full disclosure. You want to make sure that if your wife has retirement accounts, IRAs, 401ks, whatever it might be, that you know about those, because those are then an offset. If your wife has $50,000 in a retirement account and you have $50,000 in a retirement account, that's all good, right? And then you each would just keep your own accounts. That's even. So in that scenario, you're not really losing retirement. You're just each keeping your own accounts, and that works out, you know, pretty well. You know, another mistake that we'll see people make where they're losing money in the divorce settlement is comparing different accounts and treating them as if they were the same. So you want to always be comparing apples to apples when you're doing property division. So if I have $50,000 in a 401k and there's $50,000 in a savings account or an investment account, those are not the same thing, because the $50,000 in the 401k is pre-tax money. So I got to deduct at least 20% from that number based on taxes, probably more. Plus there's a 10% penalty if I'm not at least 59 and a half years old. So I got $50,000 in a savings account, I got $50,000 in a 401k, and you know, your wife or her attorney's suggestion is, well, she'll keep the cash, you can keep your 401k, and we're even. Yeah, but you're not even, because that account is, the $50,000 in the 401k is really only worth, you know what, maybe $40,000 plus a 10% penalty. It might only be worth $35,000 or less in real dollars in cash, because you can't get your hands on the money, and the only way to get the money out is to pay taxes and a penalty. Now, you know, one thing to keep in mind with a divorce case is it is possible to avoid the 10% penalty. So if we know that, for example, half the money is going to go to your wife from the 401k, and she's going to take that money and use it for a down payment on a house, she wants the cash, or to buy a car or do something. If we're cashing out the money, we know we're doing that, we can avoid the 10% penalty through the divorce case. Still got to pay the taxes. There's never any way to avoid the taxes. But you can avoid that, and that gives you more money to work with. So if there's $50,000 in a 401k, 25 is going to your wife, and we know she's going to cash it out, she can take the 25, pay the taxes. Typically they'll withhold 20% for taxes, so she takes the 25, 5,000 gets held for taxes, she's got 20. There's no 10% penalty if we do it the right way, if we know that's what we're doing through a divorce case. So there is a way to avoid the penalty. You know, kind of just makes everybody a little happier if they're not having to pay these extra costs and penalties and whatever. So that's another strategy there. But you know, you really just want, some of this is just full disclosure is the name of the game. You want to make sure you know what we have. Are there life insurance policies with cash surrender value? Are there retirement accounts you didn't know your wife had, maybe from before she was even married to you, or maybe, you know, something she's been saving you've forgotten about? You know, you want to be aware of all that before you start, because that can help even the playing field. If you know how much money is on her column, on her side of the column, and you know how much is in yours, can make more of an even division of property, including retirement accounts, and then you don't feel like you're losing quite so much money here. But hopefully that helps. There's just some ideas on what to do with retirement accounts, how they're divided, how to avoid losing everything in a divorce case, which is really the name of the game. Thanks.